A change in the risk status for today. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:20 a.m. Central Time, and I'm recording this in preparation for the market day of April the 13th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions you make. So let's dive in and see just what did happen in our overnight that could be shaping our open. Well, first of all, in the four broad market indices, they are essentially scratched. I mean, just a teeny bit of weakness at the time of this cut. Crude oil, though, that's the big mover. It was up 1.39% in the overnight. You have the euro down 0.74%, so that bearishness continues. Bonds down just a little bit, down 0.38%. And then gold also down about 0.42. In terms of our overseas markets, China up big, up 2.14%. Those Chinese ETFs continue to hum. Hong Kong also up big, up 2.73%. Japan, another ETF to keep an eye on. That market was scratched last night. Germany also scratched, with the United Kingdom down just a little bit, about 0.45%. In terms of macroeconomic reports on the slate for today in the United States, that's just one little yellow report, the federal budget balance in this afternoon. In terms of tomorrow, a little bit more activity tomorrow. We have core retail sales, PPI, both being released before the market opens tomorrow. And then you have business inventories during the market tomorrow. You can see the international reports of note there as well. In terms of our current volatility conditions to pay attention to, you see we continue to get very, very low volatilities, both in the historical IV percentiles. We note that the Russell is 0, and just doesn't get any lower than that, but all four broad market indices are essentially in the bottom 25%. We are in a daily candle squeeze on the VIX, so that would portend to potentially go up. Look at this short-term volatility here, 9.91. This is getting crushed. So look for an increase in volatility. You do have tax day this week. We often see some weakness going into tax day, followed by significant strength in the back half of this month. That's the historical norms. Doesn't mean it'll happen this year, but you know, certainly something to watch for, especially in combined with these current volatilities. That being said, when we look at the number of standard deviation moves that we see in the four broad market indices, they have been exceedingly quiet in recent trading days. In fact, 6 of the last 10 trading days on the S&P have been less than a 1 standard deviation move. So perhaps some compression, some coiling, perhaps some action setting up in that area. In terms of our regular daily market report, one thing to take note of is that we have, actually it says nothing here, but we do have crude oil futures contract will be rolling over in a few days. So you start to pay attention to the volume in the front end versus back end of that. In terms of our market trend, intermediate term phase opinion, we still remain at phase 3 throughout this entire compression phase. The default setting is that this is compression into a continuation into eventually another leg up and a new higher high until proven otherwise. Now obviously very, very sloppy kind of compression that we are in right now, so doesn't feel like higher highs and higher lows if your time frame is particularly small. But if you back out, you look at those weekly candles and so forth, you'll see this a bit more clear. Now, that doesn't mean it doesn't have some stresses to it, and certainly from our investor posture, our IBD status is uptrend under pressure. GMI index has improved and over the weekend went to a 6 out of 6, so that's as good as it gets there. Active trader market posture is bullish, so buying there. We do have markets position sizing opinions that vary a little bit because of this IBD uptrend under pressure. The investor posture position sizing is a buy long side portfolio exposure of up to 50%. Based on volatility, our active trader position sizing opinion is up to 100%. We continue to operate in this market with a very low volatility, and that certainly doesn't raise any particular risk on that side. Market timing opinion, neutral on the 1 day and 3 day. And then I mentioned a moment ago the seasonality. You perhaps might have some weakness going into tax day, and then some strength coming out of tax day as we go through this week. 2 week market timing opinion, slightly bearish. Then we get to the market posture. All 4 broad market indices are now bullish, and they're all above 50. And the Russell, in fact, is above an 80, so that actually could be labeled as very bullish. So, you know, from this opinion, new short-term and intermediate-term bullish trades are okay. So that is not a concern. But we do have some concerns still left in the market. You notice we have changed the head warning status down a notch to level 1. Basically, that's like your yellow light coming through the traffic intersection. You see the car in front of you hitting the brakes. You got to have a little bit more caution, proceed with caution, those kinds of attitudes. You have, from the volatility standpoint, you have this daily squeeze, which is a warning. From the distribution count, you have 7 on both the S&P and NASDAQ. Anything over a 5 is a point of concern. You have a volatility ratio warning has fired in recent days. And then you have the fact that we've had a lower low but not established a higher high in our trend if you look at the SPX. So a number of warnings there coming from both volatility and from our trend. From our new highs, new lows, very healthy there though, 335 versus only 45 new lows. From our E-mini chart, you have an S&P crash warning that fired a week ago, and that is not a super time sensitive, but it certainly is a warning with respect to just how much risk there might be in the market, so we still respect that. Something that has improved is our intermarket risk aversion indicators. We now have 3 of the 5 indicators that are now calling for risk on. So that's one of the reasons why we dropped this down from a hedge level 2 to a 1 for today. That plus some of the other factors such as GMI, etc. But still, significant risk in this market. This is not a zero. Do not get complacent. We could absolutely establish new lows within a day or two. This is not a super healthy market. There is a lot of red on this report. But we also respect the fact that we have had a significant amount of bullishness come back on and risk on behavior come back on throughout the marketplace, and that hedge status can come down a notch. From an option income strategy, VIX is inside the acceptable window but in that daily squeeze, so consider reduced position size or at least consider the impact of volatility in the choice of your strategy and set up for any kind of option income strategies. From covered call, we are still in that elevated level, so neutral, calling for a 2-to-1 distribution between in the money and out of the money strikes. So certainly not just doing your conventional covered call and selling out of the money strikes. You want to be more conservative than that in the current market environment. Put selling, also neutral. Acceptable, though, to sell puts against a core portfolio basket of stocks in the position size that you are willing to own. Caution should be exercised in establishing new position until you see something of a bottoming pattern formation. On our relative graph, not a lot that gets you excited about here. While biotech, semiconductor, home construction continue to be sectors of interest on this set of graphs, you see if you look at the actual lines, Obviously, you want these, kind of taking off towards this upper right-hand corner. And while these areas have some strength, they certainly are not exactly on a stairwell to heaven. So this is something that you should take into account. From point and figure, we had some new stances on the high bond yields and the mid-year treasury. And you remember we had in our intermarket risk aversion indicators, some risk on behavior coming, and these now reflect both in outlook and pattern a bullish stance. So you might want to dig into that some more. Sector market postures, a lot more green here. Keep in mind we still have that caveat that many of these lines are flat, so they're able to flip from above their lines to below their lines in literally one day's price action. But certainly you have to recognize that there's a lot more health in this right now. It looks better across all the markets. Note that utilities and energy continue to be the ones that are laggards compared to some of the other sectors. In terms of performance on Friday, industrials, healthcare, utilities did have good days on Friday, and industrials were up 1.8%, so a big day on the industrials, while financials were scratched. So a mix of high beta and low beta on both sides of the scope here, and certainly we're starting to see both in the 1 day, the 5 day, and the 1 month a little bit more green than we have had perhaps a week ago. So things have improved, and that's reflected in the fact that we've changed our hedge status. In terms of industry groups, you do have, using the shadow trader method, retail, internet, healthcare, railroads, biotech. Biotech now in the top 5. Pharmaceuticals also up there. Continue to watch, especially those healthcare sectors, retail, and also if you look at software, computer software, and some of the other tech areas also are pretty interesting industry groups and worth some special note as you select something from your watch group to move into a more active status. That should be enough for today. Greatly appreciate you each and every trading day. We in turn greatly appreciate that you like us on YouTube and share what we are doing here with your trading friends. As always, commentary and feedback may be provided to support at falconglobaltraders.com. More information about the products at Falcon Global, including our 3 live trading rooms, as well as our day trading products for the daily price guides, can be found at the website. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Thank you, and we'll see you back here, this same place, tomorrow before the market.